So the market tanked 3% on Friday, causing most of the stock market to panic. If you are a subscriber to our free newsletter, though, you'll remember that in September, on September 14th exactly, we had given out our bearish thesis and we had actually called the top here, given our chart where our trajectory was. We ended up being within 1% of what ended up being the top for the market. And so now it's time to, of course, do an update. And we'll be posting this across all the socials. So remember, if you want to subscribe to the free newsletter, make sure you hunt for a link for that, depending on where you watch it. It won't be far away. And kind of play out our thesis of what we expect next for the market. Now, remember, before we kind of do that, I do also want to point out, because a lot of people are taken off guard like by this. And even people who are saying, many people want to say, oh, Josh just got lucky because of the headline. And they don't think that we're going to get a continuation to the downside. First of all, we've gotten news that China headline has led to Trump imposing more Chinese tariffs. Be mindful of the fact that the whole tariff back and forth is what led to that April crash that took us down to 4,800, which, by the way, was another crash that we had called late 2024, that we were looking for that low in the first half of 2025. Again, we didn't need to know what the market, we didn't need to know what would cause the market to do that. Everything is always painted on the charts. When we're looking at like the broad market, you can pretty much go to any of the major tech companies, but Tesla is probably the most perfect example of this, of using something like a simple RSI indicator to understand how momentum has been sucked out of the market well before this crash happened. So, if you're watching this and you have like a financial advisor managing your money, go interrupt their golf game and see if they have any clue which has happened on the market or what to expect next, or any sort of analysis, because in all likelihood, they don't. And this stuff is not that hard. We have the top here, RSI setting a peak, market pushes higher, and no confirmation for the RSI. And typically, when RSI actually becomes overbought, classical Investopedia will teach you that's a moment to sell. But typically, if you bought overheated RSI signals, you buy these highs, you can sit through this, you'll make great money. And that's how we use RSI. It's a momentum confirmation. But if the market's meeting new highs, but RSI is not giving that confirmation, it's usually a sign that we need to pull back. We also like to use TTM squeeze, and as you can see, the TTM squeeze, you don't even have to follow the colors here. You can just use the numerical evaluation here, which stops confirming at the end of September as well. So it stops confirming for a while, even though the market slowly was creeping higher. So let's kind of talk about now what we're seeing next. And be mindful that all the big tech looks like Tesla. I just picked Tesla. The only thing that wasn't clearly bearish on before Friday was NVIDIA. But NVIDIA has actually broken major levels here as well. So NVIDIA a little bit more, I could go either way on the daily, not as clear. Weekly was very clear and is very clear right here that it's losing momentum. Concerning thing here, by the way, is NVIDIA hasn't given a confirmation in a while on the monthly here. So RSI clearly in a downtrend while it keeps creeping higher, telling you that long term, we're starting to lose some ground here. However, we don't expect the AI start to be over, but get a little ahead of myself. So using our Fibonacci's here, looking for retracements. This was the high for the third wave that we just got. And so we can use our Fibonacci's. We can expect a fourth wave pullback. Our second wave was pretty quick and it was pretty sharp. So this one can be a drug out a bit. This was a 12-day retracement here. So, I expect this to be minimum of 20 days. But that said, we'll practice some humility here and say that the third wave definitely extended further than we expected. This was a historical run, by the way. So anyone who wasn't taking profits into that, I'm sorry, but you were being very irresponsible. I think it was definitely like in the upper 5% of outcomes how extended that rally went as far as the duration goes. So it's if you're not doing historical, and if you're doing your historical analysis and your due diligence, this was extremely odd to see. So pull back here. Well, it should play out before the end of the year, minimum. I think it actually could play out before the end of November, based on how short the second wave was. The fourth wave should be longer, but it shouldn't be as quick. And then what we should see is something like this, some sort of pattern that takes us to the downside. I would expect, and the reason I have a note here is be really mindful of this 6,300 level. Not only is it a major key level here, key level being where the market has created lots of supports and resistances and had reactions to that level, but it's also probably where we should finish this first wave to the downside. Because obviously, even though this is our target, it won't happen in a straight line. It never does. Market moves in waves. So we're looking for some sort of clear 3-point pattern here to the downside. We're coming back to the support, so maybe it's even something a little bit more extreme like this. Totally possible. But typically what you would see, considering that this is a bullish wedge that's now broken, they usually have pretty violent reactions when they break. And they can even do full 100% retracements. So, five, getting through this target, getting all the way to 5,600, it's going to be a bit tough, but it's a major support level. I highly doubt we break that. And so I'll be looking to see a pretty quick move to 6,300. Wait to see if that holds, and maybe that will be a bottom and we can bounce out of it. It's totally possible, but most likely what's our base case is going to be some sort of formation like this that kind of takes us into this range. Get a box here, and we have our box there. So that's what we're expecting. We can go ahead and remove those fib levels, and you can get a clear picture of what we're kind of expecting for the downside here. And we'll get rid of our arrow, and then into the end of the year, we're expecting base case is 7,500, 8,000 potentially on the table. So, what causes that? What's the drivers? The continuation for the upside is pretty simple. More rate cuts, potentially QE, more bullish policies. Trump doesn't want the market to go down. He's all about legacy, wants to be known as the guy that drove markets higher. It's pretty simple from there, right? There's not a lot of, it's not really much speculation. It's what we've already seen, same playbook. Tariffs is kind of the same playbook as well. However, there's a lot of stuff also happening on the sidelines. And when the market's green and it's just melting up, you even saw the sentiment on social media, right? Everyone felt invincible. Oh, it can't melt down. I took a lot of flack for this thesis. We called this high. We called even the December plum in 2024. We called this high. We called this high. We called the top on Bitcoin. Told you what the bottom would be at the top. Pretty much undefeated. There's a lot of fund managers who wish they had the consistency that this retail trader has at home. So of course I ran my victory lap like I usually do. Social medias maybe got a little carried away, which if you follow me on X, is probably a bit of an understatement. But I gotta have some fun too. But the big thing here that we also there's a few things here that we need to add. When the market is getting carried away, that's when everyone's time horizons start extending, right? Quantum went crazy during this time period. It's absolutely asinine valuations that anyone with a brain knows is just ludicrous. There is no universe where this makes sense for QBTS, which might legitimately be a scam, to be valued at almost $40. Everyone knows it, but as a trader, you just play the levels, right? And so everyone's just playing the levels, and they chase things higher. It's a fiscal dominance environment. Valuations don't really matter in general, but when bear markets come, valuations start to matter, and people start paying attention to the risks, and people start cutting slop from their portfolios. Even though, even in our most bearish scenario, be mindful of the fact that if we come to the bottom of this channel, still 16% down move, which is totally possible in a bull market, won't put us at risk of a bear market at all. So even in those moments during these bubbles, you can still have that effect. So. And also what you'll have is people caring about the risks on the peripherals of the market. When we're talking about like junk bonds, and appetite for those very risk on products has been completely off. We're talking about delinquencies on homes, people not paying off their cars, people, which usually comes after defaulting on their homes, because people usually try to hold out on a vehicle to get to work. But people are, credit is rising. And now you're starting to get blowups in private markets. And when we're talking about the end of the AI story, if we do want to see something similar to a dot-com bubble, that's where your attention should be, is in these private markets. So then you're also seeing stories like these, like this Jefferies Financial Group. It really hasn't hit in the mainstream, but it's something that we've been kind of mindful of as well. And now, when the Fed is printing money, and keep in mind, when we hit a bottom here, it's not going to look like sunshine and rainbows, most likely. Okay. This will probably be the main topic of conversation. What's going on with the banks? What's going on with the private market? And what's going on with the jobs? We're blind with no data. Government shutdown, right? So we're gonna buy anyways, because what's coming on the others, none of that's gonna matter when this bubble reinflates. When we got money printing and we got rate cuts, so be mindful of that. Okay. And when we're talking about the short-term bounce here, that's another thing I'll make some comments on. Look for the government to reopen as a potential bounce catalyst. Look for Trump to fire off a tweet as potential bounce. Maybe we do get a resolution from the tariff news, and that will be a potential bounce. And those will be reentries for shorts, in my opinion. Speaking of which, we have great confluence to the downside here as well. Pretty much in all time frames. We could get a whole nother year of this bullshit to the upside, but people saying that like, oh, we got another 5 years, or things are different. I don't really see it. And in fact, like when I look at NVIDIA, this NVIDIA monthly chart is really concerning to me, even though the TTM hasn't aligned. Even though in the daily it still looks good, I really want to keep a really close eye on this name and see how this pans out. Well, that's a break there. I don't even know what this line's for. We're going to delete that. And then we look at something like Bitcoin. Bitcoin looks awful to me. Right after the market closed on Friday, there were people on social media already trying to call the dip on Bitcoin and say it's time to go back up. There's literally nothing bullish about this Bitcoin chart at all. In fact, Bitcoin might be the worst of all the cryptos right here. This triple top, every time it attempts, it gets shoved back to the downside. Trying to call a bottom on Friday. I mean, if someone you follow that you're getting advice from was tweeting stuff like that, I would unfollow them immediately if they don't understand the bare minimum of basics of the markets. Harsh, but it's the reality. This thing hadn't even come back and tested a key level under the 1 hour. It's been completely suppressed under the bearish EMAs all the way since Friday. There's been literally no signs of life on this. So, and the daily is about to flip mega bearish again. 2-day is same as well, and then the weekly as well. So we've got super spooky bearish confluence. This thing likely takes out 100K with ease. Your big major level test where you could kind of get a bounce, maybe 107, and then at 98. I think we take both of those out because it just looks that bad. Even the monthly stopped showing signs of life in July. So in my opinion, Bitcoin's been running on borrowed time for a while. Compare that to Ethereum, and Ethereum on our monthly chart here looks amazing. I can see that we've actually broke this wedge back to the downside, pulling back to the bullish EMA. Wow, actually, that's a big move from Ethereum. That just happened over the weekend. We started ringing alarm bells when this failed, this breakout. We actually sold into this, and we started trying to build up some positions. And when this failed, we got out of Dodge. Maybe tried one more attempt with a really small position to see if it could reclaim on this candle here. Didn't happen. As you see that happen, you gotta, if you don't just want to get out, you probably want to get short. The only thing here for this chart on Ethereum is this monthly still looks fantastic, in my opinion. And I don't think the rally's done. But get ready for Monday. Everyone who's hoping for a bounce on Monday, I think they're in for a spooky surprise. Halloween's coming early. Get ready, strap in. So that's what we're seeing on the market right now. If you have any questions, let us know. Make sure you subscribe to that newsletter. A lot of people were taken off guard by this. We've called a lot of highs just like this. We don't need to know what is going to happen on the news. We just have to look at the chart. It was painted all over the chart how momentum was already dying. Anyone who didn't see that, they're not just using the most simple tools that they have at their disposal. Okay, so study up. It's really important to learn this stuff. We'll be putting our full course actually on our website, which will be coming out soon. I gave a time frame to our Discord members, and we've pushed it back a little bit. So we have some beta testers that are going through it right now. It's like, so we've rewritten some stuff as we've gotten some feedback, and so even though it's complete, it's finished, we're making some changes so that when it fully releases, everyone will have a very positive experience with the way that it's constructed and set up. And it will be set up a lot like the series exams. So if you are a licensed professional and you're looking to really level up your knowledge base, because let me tell you what, this is going to be 1,000 times more helpful than any licensing exam. Okay, when it comes to actually being proficient in markets and understanding the fundamentals and mechanics of how markets work. The CFA, I'm talking 1,000 times better than your Series 7, 1,000 times better than your 65, 1,000 times better than a CFA exam. And I say that with absolute 150% confidence that the lesson plan we've written will make those look like a joke, because they kind of are a joke. So it won't be easy at all. It's a ton of information, but it's broken down in the same format as those exams, different lesson plans, quizzes, and then a final exam at the end as well to test your knowledge. If you pass that final exam, we'll give you free membership to our private trading community for like a month, maybe 3 months. Maybe we'll even do 3 months. It's not going to be an easy course, and it's long. So you can pass the final exam. Maybe we'll give you 3 months. We'll see. We haven't decided yet. Stay tuned. Follow me on X to get updates on that. But But yeah, that's what we've got right now. That's what we're watching on the market. This is our next base case. Remember, we're not perma bears, we're just trading the waves of the market here. So, I still got some positions that I'm long on, and, I've sold calls, or I've obviously loaded up puts. And so while everyone's freaking out Friday, we were sitting back and just letting money print. And that's a great position to be. So if you want to know what it's like to be completely calm when the market is completely chaotic, maybe check us out. We will be free for this upcoming week. So we'd love to have you. Have a good one. God bless.